How do I find that live thing again? Does it go live? Oh, not private. Not private. Public. Public. Why does it say private? Let's go. Oh, there it is. Finally getting the hang of this, I think. There we go. Whenever you go to create one of these live streams, you sort of open it from the streaming software and then you have to go find it yourself. And then for some reason, every time I go to find it, it comes up with this private one, but it's actually a public one. But anyway, I'll figure it out eventually. What are we doing? Let's have a look at these closes. So BTC strength, got a hold level, trend move topside. It's not perfect because we're going to have to, basically the hold level has to try and break a trend now. So not a perfect close for strength of asset on the daily. Weekly's good though. It's kind of just over the top of the trend. So once the daily has its little stuff around, the weekly should be able to push up from there. And that's a pretty good dump as far as right before close. So would have been good to get down under some of these other levels, but and we could bounce off this trend and head back up, which could be like a bit of a reversal of the pump that happened just before close, or it could come down a bit further, bounce off the range trends. But really, you want to see this next day under this stuff, and if it can, and you don't want it converting that 66.23 into high time frame support. Now the weekly's good, back under the trend, opened on the wrong side of the uptrend, so could push up, but then ultimately would probably dump on that, which means we should see decent, although you might get some daily fluctuations. Overall, the weekly should end up coming down based on that. And total 2, yeah, under trend, under resistance. Daily fluctuations, maybe a daily dump, but let's see what the weekly says. But the weekly's back over top of the downtrend, back up inside the range. So the weekly should be able to push up. Daily totals could create a dump under the trend, but it is above the break level. So if it dumped to the break level and bounced, what would it do on the weekly? Don't know about that. That's not great. So it's totals could be a problem. Could be a problem, even on the weekly. So might. What's that? 3.59, 3.52, something in that range there, maybe. If it pushes through that, we could go back up and test that, but that's, yeah. Don't know if I like that one. So got resistance and everything up here as well. So even if we have like some kind of big move to the upside, it's coming from the wrong place. So you don't really want to start a move to the upside from underneath range trends because you've got 7 days. That's all good. Everyone gets really, really hyped up. And then the candle ends up pulling back down more often than not. So that's probably not so good. Daily trend move to the top side, under trend. We did hit the break level. So this can get really good as long as it keeps moving up. It's the same thing we've been saying, basically. all week. As long as it keeps moving up and keeps getting these smaller time frame closes over the top of these levels, then it can just keep moving up. But what can also happen is that this trend can stop the daily from getting back to that break level a second time. And if that happens, then tomorrow that break level becomes an origin level, and then you can actually reject straight off that and start coming all the way back down here. So that's it just needs to keep moving up is the gist of that. It's good we didn't create a hold level. Trend shifted to the bottom side. And we've got origin level support at 101. That's good, moved up, but it's still under the trend. So tricky this, because it didn't create a hold level, but you can see it's really close to just hitting the underside of the resistance trend. So, and it's not a hard close trend yet, so we could just reject off that. This could be a deviation, all this here. Could just reject off that and come back down. 23 days too, so it could go for a bit of a play to the upside even, and then come back down, but that's not a great place to close. No weekly hold level on BTC, but it did get over the range trends, and it did get over the interior downtrend, so it could bounce, but it doesn't really have anything to break these higher trends yet. So yeah, it could pull back. In fact, there's really nothing stopping this coming all the way back down to the 100s, but it's because that's never been made into high time frame support either. So it needs to spend a week without going near that 107212. If it can stay away from that for a week, then that becomes support, which is good. Unfortunately, the top side of this range is going to be a rejection. So that's 124.539. So we've created further resistance up there. So yeah, could bounce up. This is the level probably to watch out for today, just if it does push through to the 117.855, because that doji, horrible dojis, but that is potentially going to be some pretty solid resistance there if that doji is in fact a blue candle. No hold level on the 2 week, yay. No trend move, regained the old trend over top of the downtrend. 2 more weeks of upside would be good if that could close up. So, okay, this one. So this is exactly what we kind of didn't want to happen. So we've got a hold level, 115.222.6, but it's a 3-week time frame, so it can spend a bit of time before it reverses. But we've also got a range trend sitting right here at 113.7. So we could go just in between these two. That's entirely possible. This range trend could break that hold level. That's also possible. Like what happened down here, we had a this red trend used to come through here, and this was an interior trend off it, which created this support here, which broke that hold level there, which is why it came down, hit that, and then bounced straight up through the hold level. So over here we've got a range trend, we've got a hold level, and you don't really know what's going to happen. It could bounce off that and just moon. That'd be really bullish. But at the same time, it could also just dive down, grab all that liquidity. You know, there's all those longs that are, all those bullish longs that are sitting in this lovely airspace down here. And this is pretty much, where's the support? That's not high time frame support for another 3 weeks. That isn't either. So that's all you really got is stuff down here in this area. which would be things like the first touch of this down-facing range trend, it could bounce off this trend from back here again, but that's not, the more times you hit a trend, the more likely it is to break. So I don't know whether you'd rely on 101 to hold based on that. So bullish cases, it just bounces this trend and moons. And bearish cases, it hits this hold and could dive all the way down to sub 100. So that's pretty fun. Why do we have to have that? No hold there, that's good. New range trend down here. So untested range trend, a little bit lower down. So yeah, if they flush these longs, it's definitely a buy the dip. If we're adhering to a 4-year cycle, this is the end and price here is stagnant. Yeah, if it's a 4-year cycle, it's probably this week, next week would be the blow off top, and then after that would be the rapid dump. If it's a 4-year cycle, it's kind of just getting there now. I think it's, there's a couple ways you can look at it, but yeah. So red line, which is pretty much next week, would be the final push dump if it's that, and of course that's the other way, which is, so normally what happens is this moving average will cross over the previous all-time high, and after that you'll have some kind of dump. So this is not quite as accurate as the other way, but it's just the moving average we'd have to have a big pump to bring that moving average up within that time frame there. So, which is kind of what you get with your blow off top. So, yeah, I've sort of thought we might push up to there, but we'll see. Okay, so what else? So this is just on the wrong side of the trend. So that's not kind of where you want to be. But it can still go up. It has to find some kind of resistance. What else? If only that had closed yellow, that would have been amazing. But we're still above the trend. It's not too bad. See, this is the kind of thing that could bounce, but then just end up coming back down, you know. And that's not too bad either. It's closed far enough away from the trend. So if it pulled back down under there, it could come back up. But it has, there'd be 119 would sort of be the resistance there. Okay, so Sol. Cheeky. So Sol closed just underneath the key level. So it could push up. You could get some upwards momentum through the day. But it's very possible during the day it just ends up pulling back down and going down again. And this is really, really risky because it hasn't hard closed anything down here unless it can stay up for longer. So that's, yeah. So it looks like they managed to just pull that back on the daily. Fun times. Let's see. Do we have anything better looking? So this is 208. So if you saw that thing I just chucked in the Discord, if they want to expand to a $400 range, it's possible that they can't close this month over 208, which is like a completely new sort of concept that I've just sort of spotted some kind of pattern that might be how they actually choose to create a range and where they choose to put the top of it. So if it is, then what will happen is we will close the month under 208, we'll close next month over 237, and then we'll create a range which can send us to 400. So that'll be, if that happens, that's kind of cool, and I wish I'd known that years ago. But if it doesn't happen, then it's nothing, and that's also acceptable. So, but now I'm looking at it and going, well, we've got this weird little hold level here at 208, and I'm going, oh yeah, maybe they don't want to get over 208. I guess we'll see. Hold level at 223. Backside of trend around 229 on the wrong side of the trend. It's not high time frame support down here. New range trend to target. I don't know whether that's very bullish. That's bullish, kinda. Problem is the range is quite small. So hold candle, high time frame resistance. So if we pull back down under 197, targets would probably be up to 204 based on that. But it's a front side hold. It's back up inside the trend. It's actually, this looks bullish, apart from the fact it didn't really overcome that key resistance level. But it's got a week, so it could push all the way up here within the week and then retrace back down, and it would still be following rules. So it's, or it keeps going. Who knows, actually. Let's see. New range trend, no hold level. Backside of trend is still going to be resistance, but it's in the right place to break that. Still really nothing. That's a nothing. That's under that key resistance, but back up above the range trend. Ooh. What's that going to do? That's pushed back down under trend. So the last time we hit this trend from the underside was that candle, I think. Or was it that one? Spiked through it, came back. I've got a new range trend down here for testing as well. 190, 174, 149. And that resistance is sitting at about 204, 205. We're under that and hitting it already. So that that could send us back to, what do we got there? We've got 188 or the range trend, 155. Eek. I put an extra line on there. I think I did. There we go. We do have a new uptrend though, so it's a bit like timeframes like this are a bit tricky because you're sort of pushing into the resistance. You've created a new wedge, and of course, ranges usually they test both top and bottom. So we could come all the way back down here and end up bouncing back up again. Depends how bullish they want to make it, really. But this is the kind of thing that actually can create some kind of bigger range. If it takes off from here and the next 7-week close is above this 256 area, then this becomes the left behind hold that creates a range, and that I think we've figured out how to measure. So that would be another sort of test case, much like what the monthly could do. So that's and that's sitting under resistance at about 205-ish. And most likely place that would reject back to is the 180s if it rejected off that really big range trend. that's a range trend coming through there. Yeah, I don't know. I am struggling to be bullish just yet. I think they're going to go and take those over bullish longs. You're welcome. Yeah. See, if you break this stuff down like and look at it from a lower time frame, we'll find some trades soon, by the way. But we'll show you this. What have we got? We got this. Okay. Right. So this is where that candle opened. So you got that 14-week range trend that was coming through there, and we were just kind of floating around over top of it. We didn't hard close back underneath it on the weekly. We opened a new candle, we swept for liquidity, and boom, up you go. You're at 295. You shoot up to your all-time high. So effectively, you're bouncing off a really, really high time frame moment, and then of course you get underneath it, and then you retest the backside of it, and what do you get? A really big dump, right? So that's a very polarized point. And if we come along and look over here, you can see same thing. We got above it, right? And once we got above it, we kind of bounced off it. We had another big push up. We came back down. It found support, was used as support, bounces back up. Now we've had this big dump below it. We've come back up. We've hit it once and had this rejection. Question is, what happens this time? So it's easy to be very bullish until you sort of realize how these things actually work. And when you see how they work, and you can see that being above it can create a huge pump, but at the same time, being below it can create a big dump. And all you really got to work off is greed. There's all that liquidity. There's all these people that are going donkey deep into longs again, and they're all down here. And what happens when we hit that? Do we do that? Or do we do this? Hang around up here for a while, then come down and then bounce? We don't really know, but what we do know is that we're sitting at a very, very, very important place that has basically dictated either major pumps to two all-time highs, really. Like it was that first move, the 264 move. It was that move, which was the 295 move. But it's also been the same level that's taken us back to 95. So and that we hit it again here at 207, and it took us to, what's that, 155. So got over it here, closed over it here, got up there to 253. So yeah, what do you guys reckon, guys and girls? Maybe what's going to happen when we hit that line? Let's see. So what has to happen for me to turn bull? Yeah, we'll hit that line and Marty will be like, last time to buy under 300 or something, and then it will go to 90. What has to happen for me to turn bull? Oh, you could rewind the clock a few years. That'd help. I don't know. If you've been around for at least one cycle, you would see that by this point in the cycle, everybody says that it's different, and then it hasn't been. It's just the same, and that's the bit I struggle with. It might be a little bit pessimistic, but um, I get that it's different. It doesn't mean that there's going to be a different result. And because why would there be a different result? The whole point of cycles is for big players to sell it at a higher price and then buy it back again lower and then sell it at a higher price and rinse and repeat. So could it go longer? Yeah, I suppose it could. Don't know. Yeah. So if you remember the 2020 top, people were talking about 250k Bitcoin and all that kind of stuff, and then down, down it goes. So structurally, the the level that we've got now at 120 something on Bitcoin is exactly the same. It could just, where was that Bitcoin chart? Bitcoin chart. This level right here is exactly the type of level that created the bear market last time. All right, so it's, come back here. There it is. Okay, so hit it, converted it, hit it, bear market. Hit it, converted it. What happens when we hit that? That's the bit that makes it kind of hard to be a total serious super cycle advocate. Yeah, yeah, that's kind of what I was thinking is we might hit some kind of higher high, and there's something like this in here. You see that range trend? So who saw that 15-minute thing this morning where I basically said advanced hold, blah blah blah. A few seconds later, price whipped up, grabbed all that liquidity and dumped. Right. So if you saw that, let's put that side by side fractally. Forget that they're different tokens and everything. So And okay. Now, obviously, this hasn't gone to a bear market, but somewhere in here I said, hey, we've got this level up here, and you would proof of concept because we're just testing this at this stage, but it's quite likely we've found another way to take another type of trade. So this was then that, and that when we said that, I don't know, it was 3 minutes before this candle did that, and then it just shot up, hit that, whoomp, down it comes. So what we have here somewhere there, what we have here is the origin level on the 15-minute. What we have up here is the original range trend created at the beginning of the range up here, and that basically blew through that to hit that and come back down again. What we have here so if we look for potential range trends that could apply, one would be this one, okay, which doesn't pose very good for what might be about to happen. Like you got this thing coming through here, and that's at about 118.8. Maybe we hit 118.8 and we dump because we don't have a hold level to stop that from sending the price down. Or if we look at a range trend that sits above an origin level, it would be this one up here. And that's, in those 130s. So, the price could just shoot up here, hit the 130, come all the way back down underneath that resistance, come back down, break through the trends, and just disappear, head off into the bear market. So it's kind of why it's a bit hard to be super bullish. I got 10 likes. Unless it's delayed, which it could be. Who knows? Yeah. All right. Hey, 11 now. Thank you. So yeah, let's find something we can actually take a trade on today. Could try shorting Bitcoin when it hits that. Let's see what Sol's up to. I mean, that's probably a surefire level. It'd be pretty weird for it to push past that, if it even gets there today. Don't think it would be smart to short that doji level because you just don't know, but it's possible. Whoops. Just closed it. Oh, I just got a TP. Yay. Yeah, I reckon it should. It should get up into the 124 level. Should. Same as this structure up here, which is about the 260s. You'd think it would get up to that, and then maybe reject, but okay. $204.6. No. No, nothing's stopping it so far. Key notes for that is that we're between markets, so this is Wales. And generally what they do in the cheap times, so the times between markets where they can shove the price around with the least amount of capital being spent or least amount of assets being sold, is usually to trap people. um, let's see. Let's see what the lower time frame stuff's doing, eh? Oh, goody. So there's not really any hold levels throughout any of this. So it could wick up to some kind of range trend or one of the origin levels. It could actually just reject straight from here, actually, 203.109. It might be why it's just sitting under it for now. You might just want to push it up in the last few seconds so that it can open on the top side of it and then continue moving up through the levels. We left the screen. Okay. So if this does pull back, then down here would be one entry. And you could also try and enter just back on this trend or sort of anywhere in this area. But it looks like it might close above that range trend, so you may not even get a pullback there straight away. And then that's the next resistance level, and that's 204 again. Elon tweets. Okay. Um, 199 point. That's interesting, that one. So the target for this structure over here is for price to come back to 199.39. And if we look inside here, it bounced slightly before the body. So it bounced at 199.410. So once they run into something suitable and there's enough liquidity chasing this, they might actually just come back to here anyway. $108.5 again. And 109. Yeah, I don't really trust this. Can't say I trust this pump, hey. It's pushing up from the wrong side of the trend. They've left a gap down here on the body of the hold level. Their inside resistance. Structurally, this is exactly the same thing as that 15-minute short from the group earlier today. It's just it's a longer time frame, so they could stuff around up here for 3 hours and then come back down. Yeah, and that's pushing up through the daily, so interesting. I feel lucky for the copy. Oppie. Oh. No, I don't think that'd change anything we do. Yeah, I think making any major decision right now, based on it being in between markets, based on it pushing into 4-hour and daily resistance, is probably not wise. So it would be very healthy to see it come back and test things like this range trend that's been. Actually, it's tested that, so it probably doesn't need to retest that. But something like this break level here, if it hard closes a day over that break level, it's going to probably come back and hit it again anyway. So it's not like price won't move up and down. Prediction-wise, though, is I think looking at this structure, it may not be today, it may not be tomorrow even, but seeing 217, I think should happen. So, see what Aster's up to. So Aster was doing really well, and then it kind of dipped back down. I deleted all my limit orders on this last night before going to bed, which is a bit annoying now looking that it's hit the lines. Oh well. Can't have them all. So that's probably going to dump again once it gets to somewhere above there. It's kind of getting compressed like what Sol was like. Mm. And so we got to the break level. So I TP'd here. Oh, it's gone up. And this could reject that group of range trends up here. Come back down. Maybe retest that one. Or if it does it too soon and doesn't hard close anything, then it could just keep coming down. But geez, that did the same thing. Look at that. Straight up to the old range trend and reject. Following a leaf out of Sol's book. Is that longing? Yeah. Why 217 on Sol? Well, so if we look at the daily and we throw a fib on this whole candle down here, you got level 1 being 191, level 2, which it closed slightly over, being 199, level 3 being 108. Now there is that monthly thing. Like I said, maybe they don't want to close the month over, sorry, 208. Maybe they don't want to close the month over 208, which could mean that we reject there. However, we kind of already have had that rejection off the backside of this range over here on the daily, so that's that. So the next level that hasn't had any form of rejection yet is this 217 level. So if we move up to that 217 level, first time tested, it'll probably reject. And my guess would be it'll come back down and allow them to close under that 208, which then can create this same kind of structural move, but on a bigger scale on the monthly, so that then we can continue on. So it's it's probably a bit more of a bullish bias. If you think that we're going to go higher, you'd see this come up here, hit this, reject off this, in the next 5 days, close the month under that level, only to then create the kickoff next month to then go higher with bigger levels, bigger gaps between the levels. So that's the concept anyway. You'd be really surprised how all this stuff tends to have some kind of confluence. Like that line there, as an example, the backside of the range is the level 3 fib of the new range that's forming now. And the greediest point of the hold level, the most reactive part of the hold level over here, is the 217 measure from down here. So it's the 4, level 4. So there's, yeah, the whole damn thing's rigged. Just so yeah, the bullish case based on this close, where it just snuck back up over the top and bounced off the level, is that it's probably going to try to push to here. Then it's a case of, okay, does the month actually want to go higher? Because we've still got 5 days, right? So maybe it does go higher. Probably all just depends on liquidity. There isn't really, like on the short term perspective, there's not really that much up there to take. So maybe they do just go up and hit that 208, and then that's the end of it. We reject off that 208, which would be that daily close we had today, that 23 day or 13 day, whichever one it was, created that level. Something. Where was it? That's bigger. Oh, I can't remember what we did with it. What do we do with it? Oh, there. Yeah, that level. So we've got like low time frame liquidity is sort of formed up into around there. If we don't go over that by the end of the month, then there's structural significance to creating a range potentially for next month. And it's a hold level even though it's a doji. So never know. Levels between candles, are those better or worse than the hold? So the fib levels, funnily enough, will normally have confluence with something on some other time frame, and if it's not already just very apparent in front of you. So a good one is things like lower time frame origin levels, which can affect higher time frame price action. So you might put a fib level on a weekly chart. In fact, I can probably even show you that. There's the because we had that earlier in the cycle with Bitcoin. I think there was a 3-day origin level that was a weekly fib level, but of course the 3-day origin level can reject a weekly. So something. It was when we were down here. Yeah. No, it was over there. Yeah, let's have a look. Oh, it might have been back here. Trying to remember where it was now. Nah, I think it was up here. There, yeah. Oh, it was weekly on weekly actually. So that level there was the origin support level, and that was the level 2. So you had to overcome the level 2 if you actually wanted to get back up inside that range, which is what happened here. Got back up. And then the break level. Roughly there. And then I remember we looked at something like a 3-day chart. And here it is. And the 3-day chart created the origin level on level 4, which then sent it to the new high. So it was just kind of spooky stuff that shows there's some kind of relationship between Bitcoin weekly moves and 3-day charts. And yeah, weekly levels create 3-day support. 3-day support moves weekly levels. Don't know. Which, funnily enough, is also there. So that was weekly, but it's also 3-day off a weekly. So I don't know. Yeah. I'm about to hit. It's definitely quite a soul Bitcoin pump, isn't it? Aster's not exactly flying. Some of these tokens aren't doing much. They're still under resistance. This could be worth a hit. It's hard close the break level. So if it closes over the range trend, take that. Lose 104k. Yeah, fractals. Yeah. I guess taking levels between levels is just because you might not be fully aware, but there could be something there that's just on a time frame that you don't know exists. But that line on the fib level does. And as you can see, those 2 3-day origin levels were levels of support and resistance that affect the weekly fib levels. So that unless you were looking at the 3-day chart, you wouldn't have known. But if you had respected those as levels relevant, even though they didn't really line up with much on the weekly, then you would potentially end up in and out of a trade in a better position. So it's like inverse resistance, like this thing, this blue wick. Technically, that blue wick is nothing. That's the actual resistance there. But oddly, I've seen these rejects so many times that it's just worth TPing before that line rather than waiting for what is only a couple more, couple more little bits to the upside. So okay, so maybe one trade there for later if we close over that range trend and just look to target that first little bit of resistance there. Yeah, I just TP'd some of my position at 203 point something. But I'm not interested in holding it really long term, and to be honest, I don't care if it goes up another $50 now. It's just compound it a little bit per day and leave it at that. Oh yeah. So that's the AI16Z chart. Closing over the range trend would mean closing at about 0.7 to 0.0727728, somewhere around there. And then you'd be looking for it to bounce the range trend and head up to 0.8, 0.08, sorry, I should say. So it's about 11% move. That would be the other way you could look at it, is just see if it closes over the level 4 fib. So that would be a close over 0.0748, and then just take it up from there. But that's in about 7 hours if it hasn't gone there already. So see what XRP is doing. So XRP closed up over support. Sounds absolutely filthy to take an XRP long, but let's see. Should probably do this properly. Let's see. Where am I? Okay. I mean, you could look to start building a little swing position on XRP and just targeting a couple of percent to the upside if you want to be really conservative. So that would mean just taking it up to 2.6975. Oops, wrong box. This. Let's see. Yeah. And it might pull back to that 2.6235. But it should bounce. Just more shorts. See, everything you're seeing at the moment is basically price pushing up over resistance and opening, and then you'll see it tap the resistance and then move to use it as support and move up to the next level. So that's just what bullish price action is like. But if you were to do it in the other direction, like let's say when this price was really bearish, come up here. Okay. So how does it differ? You get a break level here, you've hit the break level. So what you're looking for is that they try to push the price down below the break level, and then they retest it, then they dump. So stays above it, so that's good. Pushes below it. Now we've got a candle with a body that's underneath. There's your dump. So where would you take it to? You'd look and go, well, where's my next potential area of support? Which is going to be here. So you'd look to short this level down, particularly if it closes like this, because it'll close under the new trend. So I probably would have, when that candle happened, that trend moved to the bottom side there, I would have shorted from this to the trend, and just that's safe because it could bounce back from there. Although all the signs right now is it's going to keep going down because they're closing underneath the range trend, they're closing underneath the new trend, and they're closing underneath the downtrend. So it's probably going to try and break this hold level, or at least push into that hold level, which was already tested once by that candle and has already bounced. So we haven't hit the break level yet. There could be, because that little tap right there is right on the very beginning, there could be some other fractal time frame inside that hold level. But the next one, if you wanted to continue the short, would sort of be to this level or down to the break level. And that's just the bearish version of what we're doing at the moment. We're looking for longs at the moment because generally speaking, we keep having positive closes. And there's your next level hit. There's your break level hit. And so this one here, where the candle closed just above the hold level, you wouldn't consider that as a positive close because it's already a tested hold level. But you would consider that it's going to open the candle basically just on or under this downtrend. So yeah, that's the kind of thing you look for. And then you're looking for next level, which is this range trend. And then there's some kind of origin level or something through there, that one. So if it keeps closing under trend, if it keeps closing under break levels, then it's just going to keep going down. And you just take your TPs at the levels that could reverse it. And then if it closes under them again, you just take another short and you just keep playing it day by day. Yeah, bounce back up. So test the backside of the hold. So you'd probably, at this point, look to exit, just in case you'd look to exit if it retested the break level, because it's gone back up inside it. The next candle could lose it, but at the same time it could bounce off it. So now it's kind of becoming neutral or 50-50 as to whether or not it's going to go further up or down. If it closed just up above there, then you just want to exit your trade. Yeah, bye-bye. So it's probably going to come back up here. Yeah. And you could exit at the hold, and you might make a small loss on that if you'd taken that non-hard close level. And so now you change bullish slightly because this level here has been converted to high time frame. But you can really only trade it safely between these two levels at this particular moment, just because of where the trends are. If it even goes there. Maybe it goes there later. Let's see. Yep, there we are. See that bounce between those two levels? So that was determined back here. It just went up first. And now you're looking to see if it gets back up inside the range trend, and it's just a ongoing thing like that, really. You just every day you either have a good close or a bad close. But if you're under resistance, you're probably going to go down first. If you're above it, you're probably going to flip it into support and move up. Down. There you go. Up. So bounced off the trend. Wonder if you just longed on every hard closed level. Yeah, probably your biggest success rate would come from these types of levels, origin levels, because they are the borders of the range. So if you long that, you were going to win. See how it just completely reversed the hold? Like it's a high time frame level. It doesn't give a crap about that hold being on a daily. This thing's stronger than a daily, so it's just going to push straight through that daily hold. So that's, which means it's the same as shorting something like where is one? There isn't one there yet. See, bounced it again. Okay, this is now a range. So pretty much that's a range. So it's got to break out of the top of that or out of the bottom of that. Uh-oh. 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 There you go. And trying to get back up into the range. So then this is now a range, this little area here. So hard close over this to try and push back up if it can. Hard closed over it, got back up. Rejected off the top again. These, so there's a series of these, but so hold levels, advanced hold levels, there's time array trends. We're still working through some of the criteria for that one. Break levels, range trends, and normal hold levels. So just doing the testing at the moment for advanced hold levels, but they're all automatic. So all you do is set anchors. There is automatic anchoring, but it doesn't take much to figure out how to set your anchors yourself. Just drag a couple of lines around and then it does the rest. They're really just designed to make it much faster to do charting compared to normal. You've still got to know what to actually do on the levels. You see they're just moving the trends around automatically, so then you know, okay, we've got a new interior trend and we've got this trend resistance that it put in down here, and our horizontal levels reject. So they are actually labeled, they're just across here somewhere. Yeah. So there's your origin level. It's been created at the top of the range. Got a break level that might convert to another origin. Yep, so you now got a couple of origin levels, top of the range. So to get out of this range, so this box obviously gets bigger, but to get out of this range, you've now got to hard close over these levels. Otherwise, you're just going to keep going down. Yes, you would still have to think. See, it made a new base to the range here. So you can long the base of the range and take a guess at where it's going to go. Boom. That's what happens when you lose the base of a range. That was pretty extreme, but still. People struggle with break and hold levels more than anything else, especially if doing them on multiple charts tokens. Yeah, the alerts is good. Just getting alerts when they form. See, let's build another base to the range. So when this candle closes, this will become a base. And there we are now. So yeah. So if you get a bit of a pullback on XRP, you'd be looking for scalps down in here. Otherwise, it's probably just going to keep bouncing through these levels until it hits something up here. So that's see the candle closed just under that one there. And then boom. So it's probably fair to say it wants to come back up and retest something in there. Although the level 4 on the fib lines up with the inverse resistance, that little blue wick that's kind of like an FVG fill. So you'd be better off just to TP at that level rather than try to push it up slightly higher, or you just take it level by level. Different kinds of trends. Yeah, range trends, normal trends, time array trends. Time array trends is more about just starting on one time frame and cycling through to try and find more precise trends. So you would do something like this. Have I tried trading directly through TradingView? Yeah, I have. It used to work really, really good, and there's something buggy at the moment. It continuously comes up and just tells me I can't do whatever I want to do, or I try to move a level around, and the little confirm button stays grayed out and doesn't let me change the. I move the level, and then it doesn't actually let me confirm the move that I've made. So I've just stopped doing it. I just move it on my phone now. It's much easier. I find the app on the phone works better than anything else. Let's look at time array trends. That's it. So you would start with something like that. Make that brighter for people. And it moves to there. But these candles are kind of going below it, and because they're going below it, you know you've got some other time frame trends in play that are lower than that of a weekly. So that's when you would take your weekly, you leave that anchor point down there, and you come along here and you go cool, and you find the middle point or the pivot point rather than the start. You never touch the start, it just stays where it is. And then you find the pivot point and you find the next candle that's a full close underneath. So that becomes that one, and then that becomes that one. And that's your daily trend. And as you can see, there's very good accuracy, on that trend. So the idea is to try and find the daily trend before it's had a revisit, and then you would long it, in this case. So it would be, if I just rewind that. So if we just ditch one more candle, oops. So you've got a single candle engulfment on the weekly, and what you're thinking is like, I don't want to take a single candle engulfment on the weekly because it's higher risk. So I want to look for something maybe on a lower time frame. So then I'm going to go down to my daily, and I'll move my daily trend to there and to there, and then I'll go cool. When I get a revisit of my trend, I'll take that level, right? So that would be whenever that touches, and then there you go. Rest is history. So this is the start again. Yeah, it's still going up. We just hit something. Just hit a range trend on the 60-minute, I think. I know, we hit. So that's a prior tested origin level, so it's and a range trend at the same time. Well, we're here now, so this is our 204 level. Let's see if we get a tweet about beans. It just keeps going. Two-month trend. Yeah, there is big stuff right here. There is heaps of stuff right here. So it's I think I have that 2-month chart right here somewhere. 3-month, 1 month, 14. Yeah, there's the 2-month trend. This is the kind of thing that can send it higher though. Close over the top of a 2-month range trend in 4 days time, 5 days time, bounce off the top of the range trend, go up to 259. So it's yeah, it's a normal trend and a range trend. So that's hmm. Yep. That was your 2-month range trend coming through there, which that big dump took it down to. And now we're at the other side of that now. So if it closes over the top of that, then maybe you can be bullish up until 264, I think. No, 259, 259.8. It might almost just be worth doing absolutely nothing until monthly close and just seeing how this actually closes, because that makes a hell of a difference. Yeah, I like time array trends. Yeah, the most annoying thing is that it's a full trading week until close. So, do we get a rejection off 204? Swipe all of these people who have chased longs, then end up closing over it anyway, to then head off into the 250s. What other monthly closes are there? Is it anything bigger than a 2-month? Be 5-month? Ooh. Another level for 247. Huh. It's funny looking at all of this, which is years worth of price action, and thinking that this could just be the base of a range after all these years. Like if the super cycle thing is true, next candle closes over here. Oh, sorry, have to be this candle. Yeah. So maybe next candle closes over there in 5 months' time, bounces off either here or here, which kind of lines up with maybe coming back to the trend, and then creates the range top up there. Hmm. Okay. Yeah, I don't tend to look at anything bigger than a that's not divisible within a year. You you kind of want to have two candles that can be of equal size from the 1st of January. Unless it's monthlies, because then you can look at any monthly that is pretty much divisible by 12, or any weekly that divides evenly into 52, or that kind of stuff. Yeah. Close. Let's see. Right. We're already closed. So Asia market opens now, which means we might get the bulls going, haha, jokes, and then the Asia market might dump it. And candle times. Yeah, I got this cool thing. Very helpful. All those high time frame closes are in one of the Discord channels, though. You can see all those. And then you got your different candle closes, and then you got your market sessions. There's heaps of market session indicators out there. If just have a look through your various indicators, you'll find them. Um, okay, let's find a trade. What do we want to trade? Sol, Fartcoin. What do we want to trade? AI16Z, Hype, Sui. Hype. Okay. Let's have a look at hype. Too late, someone got him before you. Um, I wonder how long they can keep pushing that up for as to come back. Okay, so that's pushing into the daily trend. And what level do we want to do? That one. Or that one. Dum, 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 dum. I think I prefer that one. But it's going to bug the crap out of me if it hits that and goes down. How much time we got left on that candle? 2 hours and 20 minutes. Oh, don't you dare if you do that. Okay. TP. Okay. Oh, Trump's posting again. What's he doing? Signed a major trade and rare earth deal with Thailand, oh no, Malaysia, and some peace treaty between Thailand and Cambodia. No more wars. Save millions. Oh, yeah. Huh? Wait, there's a Discord? Are you not in the Discord? It's free. There's a link in the profile somewhere. Okay. Oh, really? Oh, that's horrible. B. Okay. Accumulation break created on Sol, so that means it's gone up and created a range, which has a hold. Okay, so from a fib scalping perspective, this hold that's back here is now really safe if the price comes back down to this one because it's not been utilized and it's created a whole nother one after it. Likewise, this one, if it comes back down there. It's got all that resistance up there. So 13 minutes, and if this closes under that resistance, it may try to start working back. And with hype, we're just waiting to see if it wicks up into these hold levels that are up here. So this one's a little risky because the wick of the candle's already been hit by this rejection, this blue rejection here. So you can put a small trade on that one, but go for the bigger one up the top here as a means of getting out of this one if you had to. And if it sneaks up and closes a candle over that at any point, just get out because that'll explode. Sol daily resistance. So 217 would be the hold level, and you've got a break level here which could reject, which is 211, and you got trend which it's trying to force its way through at the moment, and it can keep doing that all day long until it gets close to the end of the day before that'll really have any major effect. And that level there, that was once an origin support level, which it closed slightly under it and started to push up. It's kind of why this whole thing appears to be a little bit trappy. Like, for them to have pulled that candle down to go under that level just to then move back up again at the very beginning of the day just seems like, sure, they're going to go up, but they're just going to end up, wrenching it back down. That's what it seems like. Soybean memes. Oh, yeah, I see. Yes, there's not really too much to short on this unless you just wanted to start taking a punt that it's going to pull back down below the trend by the end of the day and keep going down, but I wouldn't short this level on the daily. Let me see if we've got... Really, it would probably be that 108 level. But even that's not really... Yeah, on the 4 hour, that's not really that great. So then it's up to the 217s. that touch. Oh, yep. This is going to try and push back to here. Yeah, if you get like 2 candles engulfing 2, it's probably just fractal on a different time frame. The significance of things like a 1 candle getting engulfed by 1 candle and then another candle is that it's actually a range after the 1 candle, so therefore it is that particular time frame you're looking at, it is a hold for that time frame. When it's just 1 candle versus 1 candle, so this example here, this one and this one, before any of these others existed, this was not really a range. It was just 1 candle engulfing 1 candle. Once the second one came into the picture and closed, then that became the hold candle for a 4-hour range. And that's just been tested by that wick. It's just hit the wick, which is pretty bearish. Didn't go up into the body or anything, and it's starting to pull back. So you can short these types of levels. What you got to be a little bit wary of is that it could continue to go up into the body, and then eventually either that trend just takes it through the hold level and breaks the hold level, or it could break the trend and then come down to the target. They do sometimes just dive through the trend and hit the target. But yeah, it's you've always got to be a little bit careful about the trend stopping the full move of the hold level, because it definitely can get in the way of it. Just like this trend is stopping us from getting to the hold level. Come on. And it's kind of why this one is quite risky, is because of that rejection that's already happened off that wick. Whereas that one up there, nothing's been touched inside that, so that's quite a safe one to look to take. And if the price spiked through the trend and hit that, then it would just end up retracing back. So it'd also be going through a break level. There's numerous reasons for being able to short once the price comes up into here. But for now, not much going on. Could look at Fartcoin if it closes up over this level. Some of these tokens really do move quite a bit. Like even on an hourly chart, you can get multi percentages just off 1 hour hold candles. Pretty good, really. Doesn't like that level, does it? Let's see. So we've got a weekly engulfment. We're back up inside the weekly origin. If we re-enter this, we should be able to target this. Try and enter either on the daily level inside of it, if we get a wick down, or on the 194.1 or on the 196.849, and then TP into the mother of all resistance, and then obviously go for the target there, which roughly lines up with entering the body of that. So that's probably the week for, or if we do get a dip, that's probably the trade for Sol. And if this breaks trend, probably take it up to there. So that level is 4,338. Mm. Not too sure why that hasn't dumped actually. I mean, not a huge dump, but at least back to here. Just trying to go up. Oh, still pushing up. Good night. Yeah, 161 limit orders probably aren't going to get touched if it keeps doing this. That being said, it still hasn't actually got a close over the resistance yet. It's just the fact that it keeps pushing, 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 which looks extremely bullish, but don't know. Wait and see how this thing closes. So when Sol BTC hits that trend, it could change pretty quickly. And when safety assets hits that break level, it could pull back up above the trend as well. although that's quite good being there. That's pretty close to the first touch of a range trend now. So 115.4 on BTC. Which close? Daily? A long time. If they want to sweep, because the weekly structure is not so bad, if they wanted to sweep these longs down here, the idea would be to push up until this gap gets bridged. And you can see people are starting to, whoever this has got 100x positions opened at 202 and 200, 197, etc. Once all this stuff starts to fill up with liquidity, and once all of this stuff on BTC starts to fill up with liquidity, then those normal moves, like the fact that we're pushing through a trend that should be rejecting, well, they're not going to bother rejecting if there isn't a cascade effect that they can create. So the bullishness of the price action often creates the liquidity in the direction that the structure says the price is going to go. And then once this area fills up, then yeah, down it goes. So with this, you're pushing up into a trend, you're pushing up into I don't know if we quite touched this, but that'd be like a 15-minute. It's only a 15-minute, but it's a 15-minute origin level that it's about to tap. And so that should knock it back a couple of dollars. But it's, like I say, if there isn't a whole bunch of liquidity in here to drive into, then they'll just hover around the level. And if they decide that they just want to go up more, they'll hover around the level and then they'll just close just over the top of it and then they'll pop and go up to the next one. So that's all just noise until it either closes up over here or it gets equal amount of liquidity that it wants to take down here and just tap, dump, or close up over pump. And IA just sent out a post saying that October is back, so we're probably screwed. Damn. Yeah, almost. Yeah, I really don't know. I think monthly close might give us a better idea. Today's closes are, a little bit trappy. mean, if they really wanted this thing to take off, why would they have sold that candle down? It's the dumbest thing ever to do if you want this thing to be able to go up, because it created an opening under a range trend, back under a break level. It shifted the trend to the top side and made it resistance. You got a hold level over here as well. It's just, it's not the way you close if you want to take off straight away. This pump was really cool, and it stopped a couple of bigger hold levels getting created, and then this is just dumb. All it does is it kind of locks price into that, because you've got a prior broken trend coming through here. So it's, maybe they don't want it to take off today. Maybe they don't want it to, maybe they do want the option to hit that range trend and push back down. And a close like this is good because they didn't create the hold level, but they can't create a topside hold level for another 13 days, and it would have to come back to 112 to bounce off the range trend. They shifted the, or they broke the trend, the previous support trend, and they moved it lower, so it could come down and retest that. So they've effectively made a range where the price is smack in the middle of it and could drop down to 104 or go up to 120. So it's just which one first. And this kind of bullish because they brought the price back up and didn't create the hold level, but they still did close it under the trend. So it's gone up and it's tapped that. Maybe not quite. Have to check it on a lower time frame, I suppose. But that, it's closed under this trend. This hold is tested. It would pretty much have to come back here, 109, to find any kind of support if it rejects off that. And that'd be the minimum. So yeah, I don't know. It just doesn't. It's not the way you would close candles if you actually wanted to go to an all-time high this very moment. And hanging around here sort of just seems like they want people to open longs. You look back at that. There's plenty to take right here. But this is a big empty gap. So if they really wanted to go up, why wouldn't they just go through that right now? It's seems like it's more of a case of looking bullish to bring longs into the game, because effectively they have just stopped out and bought all this or sold all this. So as they go up into the air and they sell into all of those shorts that get liquidated, they now need to replenish assets. So if they wanted to replenish everything that they sold through that spike there, then they'd probably want to come under 113, but they would have to sell the market down using lots of asset because there's not a lot of liquidity to liquidate in there. So if you do this and people start to open all the longs, and you've got the ability now to sell a little bit, create a cascade effect which pushes through those stop losses and brings it down to that lower level, and then they can buy back in here again, or probably that leverage right there, which is that 112. And from a shorter term perspective, that 112 is kind of like the minimum retracement for some of those levels created today. So it's yeah, and if they wanted that to be really bullish, they would have just closed up over the body of that candle and created a hold, but they didn't. So it's got a range trend. It could push up, but equally it could go down. So this one, if they wanted this to be really bullish, they would have closed that candle up because it would have then been a break of that trend. And the moment that trend gets broken by a accumulation candle, particularly if there's no wick on it, then it's going to target that topside trend. So, just a tiny little bit more on the price of Bitcoin today at the close would have made a very big difference to how this closed. So, algo wise, this candle and this trend, they have a relationship. This trend wants that candle to close under there again because it hasn't actually broken it. It's deviating from it. But then you get this trend coming through here, which wants the price to stay above it. So yeah, it's a absolute 50-50 situation where there'll be downside pressure and upside support. Yep, smells trappy. That's exactly how it smells. Because then you see this, and that is trappy. Because no one will be watching that. No one's watching a 3-week chart. And we've tapped the hold level. We've not hard closed the range trend. The range trend could bounce the price, but it's not one of those moves that's like 100% type probability. It's a could, not a is going to. The one that will bounce the price would be this scary downsloping one down here. That's got a 100% chance of bouncing the price on first touch. But that means going under 100K. So that's a little bearish. And same thing here, they could have created a hold level, but they didn't. What they did was create some new support to be tested down at 102, which would be really awesome buy the dip opportunity. They also didn't retest this range trend coming through here. Haven't done that yet, so that's still pending retest, and that's under 100K. So if this thing goes sub 100K, it's most likely going to pull straight back up above this trend again and then go up over this top side to sell into that liquidity everything that gets wiped out by them going all the way down here. See, you imagine like an even bigger version of this candle that we've just had, where it comes down into here, but actually goes all the way up into there as well. Like that's totally possible. Nah, not really, eh? There's not been a lot of moves showing up. Even before Hong Kong Open, wasn't a lot of moves. Yeah, wipeout. I mean, the bullish argument when you look at something like this is that it just comes down, hits this trend at 112, and then bounces off the trend and heads up to an all-time high. It's very possible. Yeah. And they would have closed that up above trend if they wanted it to be really super bullish. It could just reject off the back of that. And this time frame's like really obvious. It just, if it rejects off the trend, it'll go down to the hold, and the hold hasn't been tested at all in A6. And even this has to really go down before it can go up. So yeah, there's sort of, so BTC's got options pretty much from about 112, 113, where it could bounce if it's really bullish. And it's got options where it could reject all the way down sub 100k. So oh, we just do. Let's see what happens now. That's how accurate you can get on entries on origin levels, like third decimal place. Not that I'd suggest 15-minute ones as probably being big trades, but hello, there it goes. So this is what 100x traders wait for, that exact setup. And they enter with the tiniest of tiny stop losses. And they've pretty much TP by now and made a fortune. And paid a lot of fees. So that's your hold. Stop loss just above the trend. Put $1,000 risk. $1,000 risk. 5,000 something profit just between there and there. So if you could learn one type of structural trade, and you don't have to do it like this and make a fortune, you can do it like that, feel a little bit safer about life, and just make like $1,000 on each one, and then just, yeah. Yeah, you can do multiples of those a day. On the smaller time frames, though, on some of the shit coins, you just won't get a fill, which is, you got to be realistic about it. So, how's this for really cool? Everyone's probably seen those good old trend indicators where um, like optimized trend, like the IA thing, and people buy when the color changes, etc., etc. And I look at those indicators and I just get really grumpy because they advertise these ROIs that are not really achievable because they're based on not where people would choose to open and close the positions. And then you go, well, what if you just know how trend does change? And so trend changes when a high time frame level is hit, and then the lower time frames start to develop in the opposite direction in a certain order. So you can actually pick that 204 was going to be a problematic level, and then the trend is going to start changing, like you're seeing now. And so you can actually create trend changing indicators if you're smart enough. That I'm not, but if you are smart enough, that can actually find the exact point where the trend is going to change. And you could have obviously kept shorting that. If you'd had the balls to run it all the way down to that whole level. In fact, it should probably come and retest that. Be interesting to see if it goes all the way there, but you do realize that that's $1,000 risk and a $27,000 reward. Just putting it out there. If it goes all the way to that lower break level, which it may not. If you're taking it to that break level, which is almost a certainty, you've turned $1,000 into $11,000. Right. So we should trade something. Yeah. Or all you do is you just short every time you get one of those bullish alerts. Nah. Which probably means we're not going to get hype if it's going down now. Yeah. Look at that. Trend stopped the entry by just a couple of cents so far. It'd be nice if we come back down to this. See if we lose that range trend. See, like a 15-minute origin level is kind of like a range trend on a 1 hour. It's just all confluent. Like if you were looking to take a short, you'd be shorting the touch of the range trend or whatever these levels were prior tested. Yeah, so that's a prior tested origin level. That's an in-range tested origin. So 1 hour said short here, 15 minutes said short up a little higher, and the 15-minute one would have been the perfect entry. 4 hours just kind of in the middle of nowhere, but it shouldn't be where it is because it's pushed up through trends. And that's not how you break trends. So it's kind of, yeah, just in the middle of nowhere. Daily's kind of in the middle of nowhere, but pushed up through trends. And so it's bounced off the wick. So this wants to break this. Your right. Let's see how this closes and where it goes. 19 minutes. Boredom. Hmm. Okay. So what we want is we want to break the break cleaver will close over the origin and go up here. That's what we want. Soybean farm. Yeah, 286 is the biggest current fib move in play on Sol. So it's got a pretty good chance of getting there. Hello, mother. Hello, father. All right. Going up. Do-do-do-do. Alright. Uh, yeah, soybeans. Definitely the highlight of this cycle for me is the completely irrelevant narratives that people have attached to things. Okay. TP1 at the range trend, TP2 at the origin level. Okay, TP1 done. Let's see if we push. Yeah, I think so. I think I've got a referral code. Just got to keep an eye on that range trend. It doesn't pull the price back. If it does, we'll just flash close the scalp. And if it doesn't, then it's about to hit TP2. It's going to TP a little earlier. Psi numbers, just as soon as it hits 0.08, if it hits 0.08. Ah, come on. Stay above that trend. Do, do, do. No. Stupid range trends. 7 minutes of stuffing around, so it might have to wait a little bit of time and then close up above if it wants to try and push up to that next level. It could work through, but generally speaking, trends as they start to get closer to the close time of the candle normally has to obey the trend. So we'll see. Okay, well, I think I just posted that referral code on X. I think. Oh, TP. Okay. 1% portfolio growth, one scalp on a 15-minute chart. Done. Don't need to do anything else now. Do that once a day. Right. What's next? Is it time for a beer? It's not a sunny day today. Nothing there. Retire on AI 16Z. Maybe. It's about the percentage. Like, that was from there to there. Well, not quite there to there because I took half there. So that was 5%. And then, the last part up to 7.78. So if the thing, like, you look at Sol and what's it done in a 15-minute? So Sol's actually breaking down from the looks of that. If it creates another hold level here, it's to try and break that trend. But you could have done this. Oops. This is the move that you would have taken if you had traded it on Sol. It would have been this range trend up to that hold. And that's the problem. It's only 0.17%. So if you'd taken the wick of that whole candle, maybe that you'd laddered in, so you could have put half here and half here, and then look at your entry in the middle of those two areas, which is about here, and gone to the hold, that would have been 0.29%. So by the time you take your fees off that, like I pay about 0.01, I think, on like a VIP thingy, but you're still only making like 0.028 as far as the percentage of the move. And yeah, you still can make a 1-to-1 just. It would have nearly stopped out the trend. I wouldn't recommend you take like taking an origin trade like that short up there. That's easy, and you can have really, really tight stop losses. Don't do the same thing with a trend, because trend liquidity gets swept a lot. So if you want to take a high leverage trade on a trend, what you should look for is you should look for the horizontal level that lies below the trend, because that'll be where the liquidity is actually residing, and then they'll be looking to sweep to that level. But it might not always be like this obvious. Like this one was here. Lots of alerts. It might not always be this obvious. It could be something far, 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 far over to the left, which could be the level that resides in between that trend and that level. So, you might not necessarily get it, but at this stage, I wouldn't long this. So it's got this interior trend coming down like this. It hasn't actually done a yellow hard closed candle over that yet. It's got a down facing range trend, so you could try to long the range trend, but it's already had that first and second bounce on that range trend. It's already tested the wick of the 15-minute hold here, so it's kind of in a state now where it's get back up above into this range and then target this level again, or fail. So, and that hold level is implying that it's going to try and push it down. So from a 15-minute perspective, it's not super awesome. It looks like it's trying to reverse and go down. If it does get back up in here, and so what it can do if it wants to try and get bullish, or what it has to do, is it has to basically use a reverse of this hold level. So create one on the top side of this. Then you need another candle that doesn't come back to this level here. So it needs to get above that, open something, not revisit 204.102. And then the next time it hits 204.102, you can trade it like you did up there. And that becomes the bottom of the 15-minute range. And this is the liquidity sweep of the range. And if that happens, the chances are it's going to try and break the top, because it's taken the liquidity from the lower part of the range base. And then up, show strength, not revisit, hit, target top. And if you took that move, if that's how it plays out, because it may just break down and die. And if you took that move at 0.4%, which obviously if you did it on 100x leverage, fine, but doing it on something else, it's a pretty small trade really. But yeah, at this stage it's under the range base, so not a good time to long it. So pretty much the backside. So backside hold levels, which is anything now inside this. Whoops, wrong tool. Hey, go away. Anything in this part of the range is now the backside because we've had this hold level form on the top here. So this is all now backside. Taking any of these levels back here is I wouldn't take this one, like I say, because that wick's already been hit, but taking any of these levels down here and here generally give you scalps. If it's going to continue to range up, this is where this whole 50% thing comes in, by the way, and it's why you never just long the 50%, because the 50% could be a tested hold level that's not going to hold the price. So maybe the untested hold level is just the very bottom one, and hence longing the 50% gets you liquidated, whereas going all the way down to the bottom one might be the first one that can actually reverse the price. So those are those things I get annoyed about when people go online and they just go long the 50%. It's like, no, don't long the 50%. Long the bloody hold level if it's there. And if it's not, don't long the 50%. So, okay, that's my rant for today. This could reverse the price, and it is about the 50%. As for what your target would be, it depends on what gets hard closed. If you got a blue candle below this, or you use the bottom of that as inverse resistance, you could try and long this and TP into that first resistance to be safe. The resistance could be the trend, depending on how the candle gets there and how the trend is at the time. Maybe the trend has moved further out because there's been some more sideways. Don't know. If the trend ends up really sideways, like let's say the trend ends up here, but you've got the underside of this range trend coming down here, then that becomes your first resistance. So it could be any of those levels, but the thing about TPs, and I think I said it yesterday, but I'll just continuously repeat this, is entries are easy to find. TPs, you don't know where they are until you're in the trade, because the structure that gets created leading to the entry dictates the TPs. So and even like with that scalp over here, we didn't know how it was going to react to that range trend. So that's why you TP some here and you wait. And I ended up TPing that a little bit earlier, which is probably why it's dumping now. My bad. Whoops. But from a percentage perspective, which, structure's all the same. It's just doesn't matter what token it is. The structure's just all the same. And stocks are the same. They're just hard to track because they're not 24/7. But that was a 5% opportunity versus a 0.3 or a 0.4. So it was just better to take the origin level exploding on that thing. So it's that level there. Just a little bit late to the game, but ended up here. Look at this. Up, 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 up. So trend will move to the top side. See that reverse range trend? Every single time that's been hit, it's resulted in a short as well. The problem being it's kind of hard to find what the target of that short would be. It'd be something like back here. That. It is actually kind of why it's quite important to set up a chart properly, because then you know where all the actual levels are, where all the trends are. It's pretty key to getting it right. And sometimes you're just really lucky and you just get really fast trades. Like if you, and this is where this, like I want these new indicators which are going to have all these wonderful alerts. As soon as that candle right there closed, this thing would say short this, and well, technically it would say build a position inside here, but it's you know, that's it was the next candle, the wick just tapped and went. So these configuration of hold levels, which are kind of like full reversals. So price went one way, went the other, broke under the wick, hit the wick, dumped. So these are rapid fire reversal type trades. So it'd be cool to eventually get the boys to build bots and stuff based on those. Asta's not really looking that bullish anymore. Struggling. And not going to touch Sui. So I don't really want to do anything with that. And hype still hasn't actually got up into those hold levels. I see you found your way into the Discord. Geisy? Is that how I say that name? I have no idea. Welcome. There's also so the Discord's made up of as described, master scalpers, good macro discussions, bot builders, shit posters. There's also a house troll, so you'll get to meet the house troll at some point. If you post a message that basically says "I never use stop losses," you'll meet him pretty quickly. He'll appear out of nowhere. Bit by bit, yeah, rebuilding portfolios. It's. I think the thing about where we are in this cycle, maybe or maybe not, is we could be at a top. We could be at a lower high. We really could be. Maybe we've already had our top. No one really knows. And the time frames that we've got that aim higher, they're really big. So if you take something like a 99-day time frame or a 140 something day time frame, technically the target of that could be in the next bull run. And likewise some of the time frames we've got that are pointing to 70K on Sol and $70 on Sol, that could be deep into the bear. You don't really know when it's going to play out. Appropriateness quiz on BitGet is insane. Are they trying to prove that you're not a degenerate gambler? Beast. He's a good guy. He means well. There was a time a year ago when when there was a lot of people trying to long the top, and he was going, no, no. There's about 3 people saying no. Unfortunately, there was, a good couple of hundred people saying yes. So didn't go well. He likes Edna. Alright, what token can we look at? ENA, maybe? What's it up to? Haven't looked at this in a while. Zeus? Nope. We'll look at Wild? Okay. Or was that World Coin? World Coin or Wild? One of those. This one. Oh. We've missed the bottom, but still doesn't look too bad. Okay. I don't know, I've always had good experiences with them. The ADL thing and all that, I don't really hold it against them. I know, you know, if they'd given me back the money, great. Otherwise, it's not really their fault. I know that in effect their entire insurance fund gets wiped out in that type of situation prior to it even engaging ADL. So it is what it is. So okay. So that was the bottom. Wicked. That would have been a great entry. Oh, we've missed that now. I wouldn't long it unless it goes over that, because that's going to be the top of the range. Yeah, I've also got that, that, and that. Eek. So the slight problem with doing anything on this token is that this was a wick in both directions. So if we rewind a bit in this, so so that was one decent scalp, just you could have taken there. Okay. Coming back to this line would be another one, which it obviously did in the future. That was never support because it never got touched there. And shorts don't exist at that point. There's nothing. You can short hold levels. So you could take a short if the price revisits this. You wouldn't touch that. You wouldn't touch that. Okay, so there'd be one short from up here. Anything else? No. Not yet. Oh, whoopsie. Too many candles. Okay, so now we've got... Maybe that is going to become a level to short, but not yet. We'll just mark it. Okay, so that's short level, long level. Okay, so that would be your not quite touching your level. Oops. Okay. Wick below it. Close back above it. Created another level. Okay. So if you didn't get stopped out by that, because that would have probably stopped you out if you were on high leverage, but if you didn't, then you would have taken that TP into this hold level as a minimum, just there, or into that break level. So that trade would be over if you weren't already stopped out. But you'd still look to long this level down here, short this level here, or this level here. And they would have both gone very well for you just about there. Apart from that one, that might have stopped you up to that one. To be honest, that wick's just bloody huge. It would have probably... So the problem now is that what have you got? You've got the wick has gone through so many break levels. So it's gone through that one, which becomes resistance. It's hit that one, which becomes resistance as well. And these are already resistance, and these are support. It's created support, support, support. So all of this stuff down here would be support. All of this stuff would be resistance. If you get a close under here, death. If you get into these levels, potentially reject. But if you get above them, moon, that's pretty... It's kind of like what that last shitcoin just did, whatever it was. It had multiple levels like this, and it bounced off one of them, or got over one, bounced off one, and then just started cascading through all the others. And as it went up, it just sort of intensified, and just went. So I don't know what that leaves us with now, but Yeah, so it's just rejecting off that at the moment. You sort of want to see it climb up and close over here. If it closes over here, you could open a small position on it, and it may just explode like it's like what you just saw. It could, you know, head up there somewhere. There might be other things. How do you decide if you just... Oh, okay, holding spot. Oh well. With spot, you don't have to worry so much about leverage, but um, same thing really applies. If it starts to close over these levels, expect higher. If it keeps bouncing off these, expect it to come back down to the bottom of the range here. In which case, maybe you sell some of your spot and you buy it again if it starts to close over those levels, or you buy it again if it hits the bottom and hope that it holds the bottom. So you could, I don't know what that percentage is, but you could, that's an 8, 10, 10% from the roughly the bottom of the range to the top. So how do you decide if you trade between break levels? Well, I suppose it's a mental fight between probabilities and greed. Because when a break level is hit, there's kind of three things that can happen. One is it can reject off it and close under it, convert it to an origin level, and then good luck, it's going to dump, right? And that's a reversal. So hitting break levels means you're trending in a certain direction. So if you hit a topside break level, let's find an uptrend day. Here we go. Replay. Okay, so you'd say you're trending down like this, and we won't go back and we won't find all the break levels to the downside, but we'll just come down here to the bottom because there's break levels in here. Okay, so it's hitting them and it's breaking them and it's hitting them and it's breaking them and it's going down. And what it's doing is it's leaving behind break levels. So, that one's, that's an origin level there. So that would be a break level. It's an in-range tested origin level. That's a break level. Okay. And that's a break level. So when you are hitting break levels on the top like this, it's because you're trying to reverse. And when you stop hitting break levels on the top, so great example would be here, it never made it back to that one. So it became an origin level, it rejected off it, never came back to the break level. Then you've got another break level in here somewhere. Here's one. Okay. It hit it, so it's trying to reverse. It goes up, ends up failing because it bounces off that resistance on the backside there and on the backside of the front side. And then down here, we had a break level. And we fail, we keep coming down, we make another break level, it's there. So as the price keeps failing to close over the top of these break levels, it just keeps going down. Right? So that just means you're trending down. You either fail to close over the top of them or you just don't even get to them because of some form of resistance and you just keep going down. At some point, what happens is you start breaking break levels. So we'll just mark them all out. So at some point, you will hit a break level and you'll close over it. Then you hit another one, but you're under it. Okay. Now, one of the major reasons why you've hit one and rejected is probably because you've gone through these and haven't retested them. So that's the kind of thing that can happen. And so the choice is, do you take TPs into break levels? So if you had magically entered along on this hold down here, which happened to be the point of reversal, which probably is due to this here, okay? So this backside range break here gets tested, converted to an origin, hit. It actually got lost, and then it came back up, and then boom, hit, off it goes. So there's probably like a slightly finer level in there somewhere, but it's that reversed the price off the far back side of the range. It went through the break levels, which basically says to you the trend is reversing. It hard closes above the break levels. If you'd taken these TPs here, or these trades from this point to this point, you might then be sitting there with FOMO going, oh, damn, it's going to go higher and all that kind of stuff. Or maybe you just go, no, it's fine because I've made my trade today and I've made my money and I'm going to compound my portfolio and I'm doing this for a career and I don't need to have that whole pump, right? Because any one of these levels could turn that into a dump. Yeah, so anyway, we take some profit. If you want to play it really, really smartly, right, what you then do is you say, oh, okay, well, this is hard close. So if the price revisits these break levels and retest them, I will reopen some of my position. So you hold on to some of your profit and you open some of your position again, and then you go and you target the next break level. So we wait, we wait, we wait, we re-enter some of our position, keeps going down, we get a bit freaked out, we think, oh no, we're going to lose a lot of money. But what it's really just done is it's taken the liquidity from the prior range. And that's normal behavior when you are talking about a trend moving up. So it wants you to capitulate. It wants you to sell. It wants you to go, oh, damn, I'm going to lose. And then you sell to them cheap, right? So that's pretty normal. Comes back up, hits the break level again. You can TP at that break level. And you should TP at that break level because the fact that it actually couldn't reaccumulate to that break level means it's an origin level. So it was going to reject there. You could have shorted that. You could have just, TP'd you long, and then you wait. And you wait to see if you get a closure over the top of that level. Because if you get a closure over the top of that level, you can re-enter. You could also look and go, well, I'm going to be a little bit more of a gambler and I'm going to maybe see if I can re-enter on these levels down here because you've already made that money. You've waited patiently. You've re-entered maybe here. You've TP'd here. Okay. And it wasn't the whole amount. So no matter what happens now, you haven't lost on this overall trade. So now you wait and you might enter back down here. You might look for a hold level. You could enter off this candle at the base of the range here. There'd probably be other levels you could choose. You could choose maybe that one? Maybe. Don't know. Sometimes you'll find origin levels in the middle of things like, yes, like that one. That is an origin level. So that's actually what created that huge pump. So this one, it was wicked, subtly did not get back to it, got over top of it, made a hold level, bounced the origin level, shot up to the next one. So, you could have entered there, TP'd there, you could have entered anywhere around here, TP'd there, and now you're back down here again. You've almost round tripped that entire trade if you didn't TP up there. And I guess that's the point. Like, if you TP at origin levels, but you also, or break levels, you can generally speaking always get a re-entry at that price, or sometimes better, or sometimes you never re-enter because you actually got a TP at the top. And then the whole trend reverses, the whole thing changes, and it keeps going down, and you're like, great, I made money and I exited at the top. And that's why you would trade to break levels, because really it's only going to be a trend, a break, or it's only really going to be a trend, a break level, a hold level, or an origin level that's capable of changing the direction of price. and there's a certain order to which they are important. So origin levels being the actual boundaries of the range. Um, you will get the biggest, fastest moves off them. You'll get the biggest dumps if you lose the range because they are the range. You're effectively losing the whole thing, one way or the other. Oh, yeah, your trading view. And then break levels. I'll try to find an example of a break. We'll find an example of a break level that just breaks normally, which okay. See, if you hadn't have TP'd at that origin level, you would have been completely round tripped. You would have lost that entire part of the trade that you would have made. Okay. So this is a break level here. This is a hold level. This is reacting to these levels. And there's a lot of confluence in these levels because you got the hold level, but you've also got the prior origin levels that it's closed under. So that's what it's rejecting off. But if it closes back over that, it should target the hold level. Sorry, the break level. Yep. Gotta love them. So you're now up to this level. You probably would have TP'd here. Okay. And let's see what happens next. Some of these do just run off. Okay. So if you close back up over this level, even though you TP'd here, you may want to consider re-entering on the hold because it might not come back down into here. It might just test that level and go. And somewhere in the future, it may test these levels. So once it's blasted through a whole bunch like that, sometimes it doesn't always come back. And when it does, it's usually because the entire trend is changing. Okay, nearly. Oh, there we go, retested it. Back up to the back side of the range. If it closes a blue candle hard close under this, then you'll get more downside because it'll be rejecting. It might reject off this hold level, but if it keeps pushing up, then it's just regathering or recapturing this range. And if it gets through the hold level, it'll target that break level. So that's the older origin level from back here, which by the way is now hard closed. So this is probably going to go up. So that candle hard closes this origin from all the way back here. And this is sweeping the liquidity from within that. But sometimes you'll see these hard closes, you'll see the price reverses the other way, meets some obligations like retesting that level, which got, shot through, comes in underneath, but quite often in this instance, you just get an explosive move that follows once it gets back over that level. So let's see what it does. Grabbing all of that liquidity, going donkey, donkey, donkey deep. Meanwhile, you're still pretty happy that you TP'd at the level. I'd probably expect that to go up, sweeping everything. Yeah, here we go. Creeping. So it's got another break level there. If you'd TP'd at the break level, you would have got a chance to enter lower. It's a bit strange this hasn't gone up. See, normally once it does that up there, you might get a sweep of liquidity. It usually doesn't go on for this long. And then, boom, up through the top, but maybe not today. Oh, yeah. See, so in this instance, if you'd TP'd at if you'd TP'd at that break level, you might not have got a re-entry yet. If you'd TP'd at that break level, you would have been able to re-enter here. Yeah, there we go. Yes. So normally this is what happens after this happens. That's a really long time to be going through there, but I guess it still did what it was meant to do. Even I would have looked at that sideways and gone, what the hell's going on? It's taking a really long time. And how come RTs and trends aren't considered in this example? Well, they should be. You should consider RTs and trends. Because the trend can definitely stop you getting to a break level. Because the trend can reject before the price hits the break level. So you might be targeting it. And there's a direct relationship between trends and holds as well. So if you actually, so now if we do this the other way, if we mark out our holds, so you got a hold level here. Let's just do the back side. Do the front side there. Got one there. Okay, so hold level, hold level, hold level. Those three levels. And trend. And something. It's just going to be it's going to be the backside hold level or inverse resistance, one of the two. So go inverse resistance. So first trend. From the moment that trend is broken, which is this candle, what it wants to do is it wants to test some kind of resistance. So textbook says it tests a hold, which is going to be this candle. What I've found is it quite often tests inverse resistance, which is the blue one before the hold. So that's kind of typical of something being in a really prolonged downtrend, or it's going to have more downtrend. I used to always try to TP into these holds, and in the end, what I found is that I was breaking trends and I was actually hitting these, not these. Once it becomes a little bit more bullish and the trend is reversing, then it will be targeting these or even these, because there's different parts to hold levels, and different parts are sort of more about whether the market is trying to move quickly in one direction or slowly. It's sort of, but yeah, inverse resistance is usually nasty, which is that there, bang, down. So first trend break, you don't really need any other trends, but there are ways of sort of timing it, because you will normally get about 5 or 6 trend breaks before you will have a chance to go into your target. Dojis can be a little bit deceptive, so you either do include that or you don't. So if we do that, great. Okay, so so this is now cycle trends, which is a whole different type of trend again. Cycle trends are basically like after about 5 stages or 6 stages of trend break, you could look for your entry for the reversal. So because what can end up happening is you can break your first trend, which is this candle, and then you can keep breaking trends and moving down even though you're breaking trends, and you should be coming back here, right? So that happens, right? So you get a trend break, and I used to when I first started just enter on the trend break and target the hold, and then it would just go down, and I'd be like, oh, trade failed. Then what I realized is not only can inverse resistance be the target, not just the hold, which is kind of the textbook thing, but there will generally be more than one trend break before it actually targets the resistance. And it's usually about, like I say, 5 or 6. So once you've got through that amount of trend breaks, that would be where you look for a proper reversal, which would be this here, or if you look really closely, you'll notice that what's actually happening at that time, exactly that sort of moment, is it's creating an origin level, okay, which is based off that. So when this candle hits this trend break after the cycle trends actually confirms this as the origin level. This is your entry, and this is your target. So instead of entering here and going through all this time and et cetera, and going into drawdown and then eventually winning your trade, which you would do, you end up entering here after you've gone through the right amount of stages in the cycle. You break the final trend, you've created the origin level, you enter on the origin level, and you target the inverse resistance of the trend break. So that's masterclass stuff right there. Hope you enjoyed that one. And anyway, it hits the resistance, it fails, it creates another hold level, it goes through the whole process all over again. That's it. And then there'll be a whole bunch of trend breaks, which is all these yellow candles in here. And then guess what? You'll get through the right amount of trend breaks, and then it will target the resistance, which in this case is the broken origin level. And guess what? It rejects, and it goes down again. Yeah, so good. Isn't it cool when you know how price actually works? Or maybe it's a whole bunch of buyers and sellers, or maybe it's narrative or exchanges manipulating people. Who knows? Who cares? That's how it works. That's how you get a trade. That's how you know roughly when your trade is going to actually move. And like I say, when we were down here, we were kind of taking too long. Like I would have said this is just too long based on whatever that closure was. Based on that hard close, I would have never expected that to spend that amount of time down there. But I can kind of see it fell too fast. It got stuck under one of these levels and then just couldn't get back over it until there, and then it exploded. So yeah, so it's just, I guess the thing is, like, a lot of people, no offense to a lot of people, but a lot of people either just don't have the mental capacity to tie it all together, or they just don't want to, because it is complicated. And the really cool thing is you don't have to 100x leverage trade everything. Like you can just use 1x spot, 2x, whatever. The 5 cycle thing's pretty damn good. Like if you use the 5 cycle thing on things like Bitcoin daily or weekly, you can pick the Bitcoin bottom from last cycle. There's, yeah, you can also pick. It's also good when you're looking at coins that are just getting shilled by influencers and stuff. Like if it's had a really high spike and then it's come down and it's gone through 5 stages and then it's had that secondary spike, they're probably not going to harvest it anymore. Like they're not going to try and shill it anymore. They're not going to try and pump it up anymore. And that's that thing I said about Zeus at the start, was it's like, well, I can see you've got influencers still shilling it, but are they actually shilling it because it's going to have another pump for exit liquidity, or are they just idiots? And that was kind of the because it had already been through a phase. So, um, but yeah, you can use it on pretty much all time frames. It's if you used it on really low time frames, it's probably going to be more, more trend breaks, that kind of thing. But something like this on a 4 hours or a 1 hour even, 1 hour and 4 hour seem to be pretty much the same. Dailies, weeklies, etc. Um, but yeah, it's not a hard rule. It's more a case of just managing your expectations. Like if you get an entry and you're just wondering why it's just bobbing around your entry and it hasn't gone to your target yet, and you're sitting there going, "Have I made the right choice?" You just got to keep in mind that it can just take that amount of trend breaks before it happens. Um, Sometimes you wait for that amount of trend breaks and you miss your entry. It can happen, 5 or 6. Um, but it depends what kind of reversal pattern you want to trade. I mean, this would have just been perfect as a. If you forget all of these trends and you just don't focus on it, the creation of that 4 hour origin level is your reversal. Like it's now ready to reverse, and off it goes. So broke a trend, created an origin, reversed into resistance. Yeah. When you think about the best time to have bought ETH, like the stubborn influencers are the ones that keep saying ETH is bad, right? But realistically, they were all on that same bandwagon, whether they knew what was going on or not, when ETH was $1,600, and everyone was saying it's the worst thing ever, and Sol's going to kill it, and blah 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 blah. And yeah, it's 4,000 and something now. It's up over 100% from when everyone was bagging it and fudding it and saying it was never going to see its way through the cycle, and it's overloaded code base, and whatever people could throw at it. No one uses it. Blah blah blah. All right. Tell you who uses ETH. Really big money that doesn't care about a $200 transaction fee. That's who uses ETH. It's like, do you think they were going to lose? I don't think they were going to lose. So, yeah, yeah. It is just so much of it's just rubbish. You know, you can become. I mean, the hard thing is you can become really cynical and you can stop believing everything that people say. But there is one time, there'll be that one time when what they're saying is actually real, like whether it's the FTX collapse or whatever, there'll be that one time that the FUD's actually correct. And there'll be the 99 other out of 100 times that it's just someone trying to manipulate your decision making process. So I've just learned that the chart tends to tell you that something is going to happen. It doesn't really matter what it is. Something's just going to happen at some point. And it's like at the moment, we either close over this 204 level, in which case it becomes support, or we reject off it and we go down. That's really what everybody says on Twitter or YouTube. Doesn't really matter. Like it's just it either does one thing or the other. So let's see if there's anything bigger on this thing. If I was holding spot, I mean, from a weekly perspective, it's going to close back up inside that level at that point in time. I've still got replay tool on. Let's see, what did it do? Does it hold it or lose it? Boom. That's what you get. Then it loses it. Okay. So what you're looking for is you're looking for it to get back up inside this level, which it hasn't done this candle, but if it does it the next, then there's a bit of hope there on the weekly. The daily levels are, there's too many of them, so it's from a daily perspective, it's probably just going to bounce between support and resistance ongoing. But the weekly level is looking, the weekly level looks good. Whichever way you look at it, the weekly level actually looks all right here, as long as it holds this and gets back up above that. We're kind of a bit late to the party here. We should have traded between there and there for 12, 13%. And that's the top of the current weekly range. Then there's that. See, there's a lot of stuff on the weekly as well. What about the monthly? It's kind of all just consolidation down here. 2, 3, 4, 5. Okay. So if it closes this month up above 0.97, and if next month doesn't touch 0.97, then it's going to target that. Or that, or that, or that, or that, and finally that. So check back in 2 months. Or 1 actually, sorry. Close up, don't touch, bounce, yeah, so 2, up here. Ooh. I'll take that trade. If it does that. What did you enter your spot at? Put that thing on that, eh? In 2 months' time, if I get that alert, I will be taking that trade. Okay, shall we see what Sol's up to? Hey, lucky we TP'd. Cook. Yeah, retire on wild. Retire on wild monthly breakout. I sold all my cook. I got rid of it. And then I felt really stupid because it went up. And now I don't feel stupid at all because it went really low. Let's see. This is pretty much the only thing I still had sitting on the Bybit exchange. And I do think Cook and there's another one called Puff, which I didn't know this at the time, but basically Cook and Puff were part of the Mantle blockchain. Like it's an L2 on Ethereum. And Bybit has bought Mantle as its kind of in-house token. So the Mantle gas token is basically Bybit's version of BNB or all those other ones, BGB and FTT from the old FTX days. So yeah, you never know. Like they might keep it alive just purely because it's owned by the exchange now, technically. Um, so it bounced off the origin level there, so that would have been a really good entry at 0.007. You'd be sitting 9% up. The daily, so it's kind of stuck just onto that backside of that trend. Both. Yeah, I had like a big airdrop of both, but they're both owned by the same people that run Mantle. So it's it's the Mantle token that's become Bybit's token, but then it's tied into there's a thing called Mantle ETH, and that's interesting. Mantle ETH or METH protocol announces $43 million recovery from Bybit hack. Oh, there you go. So they got ETH back somehow. Yeah, so it's all kind of one thing now. Basically, anything to do with Mantle is now Bybit. It might because that's only just converted to an origin on the daily, that 0.007 level. So it might come back and hit that again and then push up. If it revisits that, you could look to take a long on it, target the break level or one of these range trends through here. Likewise, if it recovers the range trend 0.008951, You could bounce that up to the next one. And it's probably going to have some pretty okay moves. 10% moves, 10% moves. That's on the daily. Weekly, slide the little trends around. You see, if you could magically see all this stuff in advance across a dozen tokens, 2 dozen tokens, this creates your origin, this tests it, and then I don't even know what it went to, but probably, I don't know why it stopped there. Probably that good old inverse resistance strikes again, but lovely little blue wick coming through there. This would have, yeah. So yeah, that would have hit the break, created the origin, bounced the origin, gone to inverse resistance, 166. Technically, it kind of faked it out, then went to it over there, but it's about 170% move. There. Yeah. It's just a little part in the back of your mind, though, that just doesn't know whether you should re-enter any of this stuff, because if we are at the end of the cycle, it's, yeah, who knows, it could be over. Is it? I don't know. I have no idea. No idea. Well, I know I got free stuff. That's all I know. I didn't shill anything. Not an influencer. I mean, just as it currently stands, it's stuck under a couple of weekly range trends. It's going to be stuck down here unless it can get up over here on a weekly close. So I probably wouldn't do anything with this from a weekly perspective. The daily, oh yeah, the daily might give you a decent move if it comes back down to 0.0078, whatever that level is. 0.07878-ish. Okay. Do we go for round 2 on this, or has that been cheeky? Place your bets. For the record, it's not a hard closed break level. Yet. Let's go. How about we wait 52 minutes and see? Just to be sure. So is there anything down there that it might want to retest? Because this candle here, this is the hard close of this level down here. So if this is the hard close, the retest comes later, which means it could want to come back down here. Not hard close there yet. This is structural risk management 101. It hasn't hard closed this origin level here yet. So this candle might do it, and then we might get an entry off that origin level, and then that'd be a bit better entry. What's the ticker for this thing? AI16Z. Round two? Yeah, okay. I'm going to wait. I've already made it today. I don't need any more. So it's probably... Do we do it anyway? Dun, dun, dun. Dun, 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 dun. Let's see what's going on, eh? What's going on YouTube? Ooh, 620 subscribers. It's pretty close to 1,000. Yeah, statistics back in now say that the daily update videos are appealing to a smaller audience, but have a higher click-through rate. So yeah, the audience has, well, we can definitely go to an all-time high now because the audience has run away. As sad as that sounds, it's kind of one of the signs once people give up, it goes up. Okay. Do you think we've got any hope of getting a hype trade? Ooh. I don't actually want to short that level, I don't think. I just don't like that. But that one, don't mind that one. Come on, fart. It's all over. That's why I said I didn't want to touch Sui. Yeah. There's short-term liquidity going up a lot higher even. So you've got, see this gap starting to get stuff appearing in it now? Mm. People are longing it as well. I mean, it's been really close to that liquidity all day, which is kind of why it feels a bit trappy, a bit suspicious. If they wanted to take that and keep going up, it's really easy. It's just right there. But they might want to stay here so that they can get more longs in under here, then wick up, dump down. It's kind of just too expensive to push the price through here at the moment. Sol is getting some more coming in as well just now, so starting to fill up. So we've got stuff appearing up here. So who's taken a scalp today on anything, even if it's not something we're looking at? Mm, yeah. Yeah, I've only really been game to take that one. And I already had that Sol one running. So that was TP. Yeah, I mean, Sol 15-minute isn't looking great. So it hard closed under the range, which is that candle. It then tried to use the range trend from this candle here to push up to the break, which it did do. It hasn't recovered the downtrend, so it could lose that. And then it's going to target this break level. Good night, sir. So if it hits this break level and then converts it to an origin, then you could potentially get a scalp off that. But it's just not really moving much. You know, percentages are just too small. What would be quite a good move would be if it converts this but then loses it as a level, because the air gap between there and the hold is huge. So that would be huge for a 15-minute sol trade anyway. That will get you a proper 1% move down to here. And where you trade it the other way, you just bounce that and take it back up to the backside there. No retire on Asta today. So here's some weird secret sauce. If this is the hold level for the range and the bodies don't get hit and the candle closes over the top of the target, going to start back testing how many of these then actually move between the next two levels to create whatever the trend is or whatever the top of the range is. So it's there might actually be a bit of a pattern to this thing, and if there is, then you may be able to start taking trades between these levels, which will be interesting. So more stuff to go over and over and over on charts until we figure out whether it's actually part of the way the algo works or not. Oh, that's right. In our Tesla test case, we want to see if Tesla goes to 452. Can't wait. If this goes to 452, I'm going to spam that evil cat meme in the Discord. That's pretty. This is a close, one of the closes for tomorrow. It's pretty bullish if it closes up inside here. So creeping back up into the hold level. If it closes back up over the origin level running through here, then that's even more bullish. And then look at the air gap. Woomph. Need some special sound effects for that one. So let's see if they let it get up in there. And look at that, next candle. The next candle has perfect confluence of the range trend crossing over the break level. Almost like it's planned. Hmm. All right. Oh, we got some more Trump. What's he talking about this time? Dancing. Yeah. Markets won't react to that. Hmm. Yeah. See, didn't hard close. Yeah, I think I might go have some dinner and watch some TV and wait for something to come down and bounce back up, or doesn't look, looks like it might be boring for a little bit. We got London in 3 hours and 31 minutes, so maybe I might reappear for London. Maybe not live, but in the Discord. And just from a weekly trade, I think if you're looking for sol entries, if it ends up rejecting that 204 area properly, then in theory it should be this 194.1 that catches it, which would mean diving through the trend and then coming back up again. It would also mean being inside that hold level. So just the 196 would be the hold level. The daily refinement of that hold level would be this wick or body at about 187, 185 would be sort of your greedy entry, but you may not get your greedy entry because it totally depends on whether they just want to keep pumping. But that's yeah, keep an eye on that from the weekly close. It might be that they do a sweep into these levels and then go. You could start laddering tiny positions in from the touch of the trend, something along those lines if you wanted to. But yeah, unfortunately, it's going to be a while before we know what that level actually is going to do. All right. We'll catch everyone again later. And if anyone gets really bored, try to find a few tokens that are worth setting up, and I'll get them set up on the various timeframes using these new tools and start to track the alerts and do some more testing. And the more testing that gets done on this stuff, the faster it's probably going to come out. So we'll see how that goes. And yeah, catch you again.